Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday the 19th of December 2021 and we're publishing our gold and silver weekly update for the week ending the 17th of December. Now later today we shall produce a video highlighting where we see gold and silver prices running to till the end of the year. And so if you want to make sure you do not miss it, then please subscribe and press the bell sign so you are notified of the video as soon as it is published. Now this video is identical to the update we published yesterday, but using a different thumbnail and title. So if you've listened to yesterday's, you can ignore this one. If not, then enjoy. First, looking at precious metals. Gold rose $15 last week, rising from $1,783 to $1,798, having hit a high of $1,814 and a low of $1,756, a rise of 0.9%. In sterling terms, gold finished the week at £1,359, up £14, and in euros it closed at €1,600 exactly. That's up €25. Silver rose 18 cents. Rising from $22.20 to $22.38, having hit a high of $22.70 and a low of $21.45, a rise of 0.8%. In sterling terms, silver closed at £16 and 92 pence. That's up 18 pence on the week. And in euros, it closed at 19.93 euros. That's up 0.31, or roughly a third, of a euro. The gold to silver ratio rose from 80 to 1 to 80.3 to 1. On the cryptocurrency front, Bitcoin fell $1,833 and currently stands at $46,888 and once again seems under pressure. Now looking at equities. The Dow Jones closed on Friday at 35,365, down 532 points on the day, and down 605 points on the week. The S&P 500 closed at 4,620, down 48 points on the day, and down 92 points on the week. And the Nasdaq Composite, which actually had a very bad day on Thursday, closed at 15,169, down 10 points on Friday, but down 461 points on the week. Moving over to oils, we can see that Brent crude closed at $73.52. That's down $1.63 on the week, and WTI crude closed at $70.86, down 81 cents on the week. The currency, the dollar index, stands at 96.56. That's up 0.47 on the week, though it was above 97 at one point. Now, we concluded last week's video with the following forecast, quote, "We see gold trading between 1725 and 1825, with 1700 to 1850 as outliers, and silver trading between 2150 and 2350, with 21 to 24 as outliers." Well, gold traded well within our normal range without moving into outlier territory. And though the difference between its high and low the previous week was just $23, this past week it moved to 58. Silver also traded within our normal range, but temporarily dipped into our outlier territory on the downside by just 5 cents. The difference between its high and low was $1.25 in a week that frankly could have proven more variable. But silver's decline over the past few weeks has been so significant really, it limited any further major fall to the downside. So all of the news last week was centered essentially around the FOMC decision on tapering on Wednesday, whereby it basically doubled its tapering of its bond buying program, meaning that additional bond purchases will cease after March 2022. That's the increase will cease. And the Fed also indicated that one can expect to see 3 rate rises of 0.25% each in 2022, 3 in 2023, and 2 in 2024, thereby resulting in the Fed funds rate reaching 2 to 2.5%. Frankly, we do not think this is an impossible goal. And in spite of those pretending on YouTube that the Fed cannot raise rates to these levels, actually, there's no reason why they cannot. because even at these levels, interest debt repayment is still manageable. We admit to have rates rise higher than these levels would be hurtful and difficult to achieve. But up to this level, no, it's indeed possible and manageable. The Bank of England actually did raise its rates on Thursday by 0.15% to 0.25%, and suggested that by the end of 2022, we can expect to see the bank base rate reach 1%, which again is manageable. Also on Thursday, the European Central Bank did not raise rates, and then essentially conducted an act on the one hand which reduced its version of QE, while on the other kept the door open to continue it by another mechanism. When we have time, we shall look at this sleight of hand a little closer. The bottom line is, however, that inflation, whilst being allowed to surpass central bank targets of 2% for some time, will not be allowed to totally run away. The balancing act is to ensure that inflation is at least held in check, even if it is at a highly elevated level, while not damaging the underlying economy or reducing jobs. US economic data last week revealed disappointing retail sales for November, coming in at 0.3%, compared with 1.8% in October and expectations of 0.8%. To some extent, this prevented the FOMC, in our view, of being even more hawkish than it was. Now, on Thursday, we published a video entitled Gold and Silver Rise after FOMC, BOE and ECB announcements. And if you haven't listened to that, please do. We've placed a link below and in the comment section. This video encapsulated most of the changes and our views on where we saw prices moving and why we believe the Fed was not quite as hawkish as many believed it to be. But that said, any pressure downwards on the US dollar was somewhat mitigated by the even more dovish response coming out of the European Union and the European Central Bank. Now, before we look at the technicals, let's just take a quick glance at the US economic data being published this coming week. On Monday, we have leading economic indicators for November. Tuesday, current account deficit for quarter 3. Then on Wednesday, we have the GDP revision for quarter 3, consumer confidence index for December, and existing home sales for December. Now, on Thursday, we have the weekly jobless claims, and just bear in mind that last Thursdays they actually rose, but we also have a raft of additional data. Nominal consumer spending, nominal personal income, core inflation, real disposable income, real consumer spending, durable goods orders, core capital goods orders, and new home sales, all for November. And we also have the UMich Consumer Sentiment Index for December. And then on Friday, being Christmas Eve and a holiday, there will be nothing scheduled. So all the action is Thursday, but don't ignore Wednesday. Now, looking at the technicals, we could see that although gold rose above $1,800, it could not hold on to that level for long, which to some degree is a little surprising because there are a number of tailwinds for gold. You have the risk-off market sentiment to equities. You have 40-year high inflation levels, and you have the effects of COVID-19 and now Omicron providing uncertainty in the marketplace about their continuing effect on the global economy. But all of this, to some degree, has been counterbalanced by the continuing strength of the US dollar, which in our view, thanks to the ECB, will continue to rise. So technically we have psychological resistance for gold at 1800, but perhaps a more realistic level at 1818, which represents the 50% Fibonacci retracement level. There is psychological support at 1750, and then quite strong technical support at $1,732. Silver attempted a rally like gold but fell back, which is not overly surprising as we've stated for a considerable time now that until the economy is seen to be in robust health, silver will continue to underperform gold, and the rising gold to silver ratio clearly shows this. There is considerable resistance at the 2260 and moderate support at the 2230, 2210, 22 and 2190 underneath. The 20 EMA rests at $22.90, and the 50 EMA at 23.20, both of which act as quite reasonable additional resistance levels. And if silver is to really break out, it has to get above that 50 EMA. Now tomorrow we shall state where we see gold and silver reaching by the end of December, and early in January we shall be reviewing this year and presenting our forecasts for 2022. Needless to say, our predictions for 2021 were far too bullish. And to some degree, like many others, we got caught up in this rather bullish phase. But compared to most, we were still extremely bearish. And once again, as it has been each and every year, the pumpers have been many hundreds of % awry. So with all this in mind, we see gold trading this coming week somewhere between 1725 and 1825, with 1700 to 1850 as outliers. We're not really expecting a move into outlier territory unless there is some major geopolitical news that comes out that we're not expecting. And we see silver trading somewhere between 21.50 and 23.25, with 21 to 23.75 as outliers. What do you think? Where do you think gold and silver are going to trade this coming week? Is there going to be pressure to the downside, or can you actually see them uplifting? Do share your thoughts. Meanwhile, thank you so much for listening. If you haven't done so, please subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they're published. And finally, we wish you a safe, enjoyable weekend and prosperous week ahead, looking forward to Christmas this time next week. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.